All right, welcome you guys. This is going to be a class on the advanced side of things when it comes to order blocks. We're going to be covering different types of order blocks, what they mean, how to use them to your advantage, how to spot them, and also how to enter off of them. So to start, before we even talk about what an order block looks like, what it is and all that, we first have to talk about the 5 types of order blocks. Yes, there are only 5. We'll just call it OBs for short. These are all of your blocks. So number 1, we have an order block. Number 2, we have a breaker block, propulsion block for number 3, mitigation block for number 4, and then for number 5, we have a rejection block, okay, for number 5. Now, these are your 5 types of blocks. They all do something slightly different, but they all have the one thing in common, which is block, right? Every single one of these has the word block in it. You may be wondering, why am I even emphasizing that? That's kind of obvious, right? The reason why is because when we talk about OBs, you have to really think that simply about it. All it is order block. It's in the name. It blocks the orders from going through. What does that mean exactly? Okay, so now we are going to talk about what exactly is an order block and how does it block the orders, so to speak. So to begin, an order block is simply formed on a swing point. So anytime you see price turn around, as in, we come down, we move back up. Say we're coming down and then we just move back up. An order block will be formed somewhere down there. So the order block will be formed somewhere down here. Okay, as we turn around, the order block would be on the swing low. If we are moving up and then we have a sharp turn back to the downside, the order block will be formed at the swing high, just like this. Okay, it's going to be basically your pivot point. Now, once again, how does this come in for blocking orders? What does that exactly mean? Whenever we move up like this, we'll maybe tap into something like a bearish FEG on a higher time frame. Maybe even swipe out a high, right? Maybe there's a high somewhere to the left that we hit, right? Liquidity sweep. We hit that and we turn back the other way. Okay, the order block forms here at the top, and we block all the orders from going back above it. Like I said, it's in the name, simple as that. We block the orders from going back above, which means there's no more liquidity left in this area. There's no need for us to come back up to here. Therefore, all the orders are blocked, and we will go in the opposite direction. Same thing down here. If we're looking at price moving lower, we will tap into something like maybe a bullish FEG on a higher time frame, maybe even a low that gets swept. As we swept that liquidity, whoever was holding along, maybe it looked like this before, we did something like this and we flew up for a while. Okay, everyone's happy who was in the long originally, but then we have to come back and stop them out. They get stopped out here. We tap back into FEG. We did a sweep on the low. They got stopped out. There's no need to come back down here because whoever caught this original long is stopped out. And that's why the orders are now blocked from going back beneath this, because everyone's other orders are still back up here, the ones who caught the short. So it's an endless game of stopping out who caught the long here. Okay, we stopped out all the people who caught the long. Now it's time to stop out the people who caught this short. And now we don't need to come back beneath here because we blocked all the orders from coming back beneath. Now, that's just a simple and basic terminology or logic behind the order block. Once again, it's in the name. We're blocking all the orders from going through. Now, let's talk about what this actually looks like, okay? What does this swing point actually look like in the candlestick form? So this little V that we have, when we come down and we go back up, this is our order block. This is what an order block looks like. It's 2 candles, and you can see it's almost like a swing low that forms down here. We're getting that V, and then we get multiple bullish candles back up. Something like this, for example. If we're coming down, we swept out the low, we have like a higher time frame bullish FEG somewhere down here, right? We're tapping into it. We get that little swing point. Remember, the order block forms down here. When we come back through this and close back above a bearish candle, that's us basically turning back around. It's us getting that up move. As we close back above the open of this bearish candle and engulf it, this is where our order block is formed. Okay, so most people already know that. Once again, we're just kind of covering the very, very basics of it. And this right here would be your order block. Okay, your OB. Now, once again, this is extremely basic. We're going to talk about now how you could spot this from a bird's eye view kind of thing, like from far away. This right here, okay, to simplify it even more than the little swing point thing. Remember, the swing point looks like a little V. All we're looking for is what's called a tweezer bottom or a tweezer top. This was kind of it's the wrong definition here, but this would be a tweezer top. This would be a tweezer bottom. Okay, what this is simply two wicks followed by an engulfing candle. In this picture, it's not really an engulfing candle. What is an engulfing candle? You may be wondering. It's simply when we close above a bearish candle with a bullish one like this, or vice versa. We'll have a bullish candle being engulfed by a bearish one. So this is also what we're looking for. Basically, to simplify it even more, once again, this picture is kind of like a 3D graphic. This one's a bit more realistic where it shows the actual candles. This is what we're looking for. Okay, tweezer bottom down here, and then a tweezer top being a bearish example. We're moving down that bearish swing point. Once again, the tweezer top will look like this, a swing, and the tweezer bottom will look like this, what we have in this example. Once again, this is just the basics. We're about to kick it up a couple notches here, okay? But just remember, guys, this is what we're looking for. When you look at an OB, this is what we're looking for, okay? Now we're about to talk about prop blocks, and we're going to go over one example of an OB in a live market, or a past example. Now I'm just going to jump down to the 1 minute, and we're going to see if we can find an OB. Right down here, this would be a pretty decent example, okay? This right here is what I just drew. It's that dip down, followed by a move back up. If you cannot see it, once again, the line chart is your cheat code. All you have to do is go to the line chart. You can see that this kind of exists here. There's just a little extra hump in there, but it exists. Remember, the OB forms on the swing point itself. Once again, think back to that little orange circle that I just drew in the beginning. The OB forms down here. Where do we see that? Right here. We have a bearish candle getting engulfed by a bullish one, and then we're ready to go. Okay, now this is just one example. Once again, your OB will be formed right here. That's an OB on the 1 minute. Absolutely. That's all you're looking for when you're looking for an OB. Typically, price will try to respect the open of the OB, but we'll talk about in a second when it's not supposed to respect that. So let's find one more example so we make sure we all get it. Once again, this is still just the basic stuff. Find a bearish example. Okay, so like right about up here, right? Price was moving up for a while. We were moving up for a while. Then we were ready to turn back around. We start moving down, and we do this, right? We finally dumped. Okay, this, what I have drawn, is exactly what happens here. This right here would be the very top, the peak. Where's our OB? We're looking for a bullish candle that gets engulfed by a bearish one. So it gets, this bullish candle gets engulfed on this bearish one right here. You're simply looking to put a line at the open of this bearish candle, and this would be our OB. This is a bearish OB. Okay, now our OB types. Remember, we're going back to our OB types now. So remember, these are our OB types. There are only 5. We're going to cut out the ones that don't matter. Okay, one that's absolutely useless is this one, the mitigation block. You don't need that. Why is that? It's because almost every single OB you see is technically a mitigation block. What mitigation simply means is us coming back to fill something that was untapped. Okay, think something like in FEG, for example. As we're moving up, we never did tap this FEG until we hit something way up here. Then we come back down to fill it. Of course, it doesn't hold, but we left this one unmitigated. Okay, if you really think about it, every single OB that you take is an unmitigated OB because we leave a lot of them, right? For example, we left this one. This is just a regular OB, but they'd call this a mitigation block because we left it untapped and then we come back to it and then slightly holds, whatever the case may be, right? It's useless. I'm going to put them in the order that you should really be using these, okay? These are the OBs that I have ranked in order of usefulness, okay? Notice how I have propulsion block as number 1. Okay, this is also called PB for short. Forgot to abbreviate them. So PB for short, we call order block OB. We call a rejection block RB. We call a breaker block BB, just for short. So why is a propulsion block my favorite one? Let's talk about it. A propulsion block is simply an OB off of another OB. What this looks like is as we're getting that swing, right? You have an OB formed. We'll tap quickly into it and then just fly. Remember, the OB forms down here, right? We get that engulfing candle. We'll tap right back into that OB. This will be our OB. We tap into it. And on this dip down, we leave another OB. This another OB that we leave is called a propulsion block because it's simply an OB that touches another OB and we still go in the same direction. What would that look like? Well, if this is our bearish OB, right? This is a real OB, a bearish one. We're looking for simply another bullish candle that gets created and for it to get engulfed to the downside as well, which means this right here would be our propulsion block. Okay, so let me get rid of the bearish OB for a second, just know it's still there. This one right here would be our propulsion block. Maybe you're wondering, well, Playa, what is a propulsion block supposed to do? Remember, an order block blocks the orders. A propulsion block basically sends price in that direction quickly. It's in the name. Remember, don't overthink it. All this stuff is in the name. Order block blocks all the orders from going back beneath it because we already swept liquidity. We already talked about that. Propulsion block sends price quickly in the direction you want it to go. Now, remember what I said a propulsion block actually is. It's simply an OB off of another OB. What that means is you can have multiple. So if this is a propulsion block, it's an OB touching another OB. We're looking for another bearish candle to get engulfed. That kind of happens right here. This also is a propulsion block. Okay, all this in here is also a propulsion block. This one, for example, right here. This is a bullish candle that swept a little high. This is another propulsion block. Okay, there are multiple. There can be multiple propulsion blocks is what I'm trying to say. Because sometimes price is a little slow and then it really speeds up. But once again, the speed comes from a propulsion block. Why is propulsion block my favorite? You may be wondering. Because you can gauge a reaction off of an OB. Say you're not sure that this is going to be the main swing high. If we get a propulsion block off of it, or prop block for short, that simply means that we have a very high chance of eventually speeding up to the downside. Now, once again, think back to what I was saying like this. A swing high gets created. If there's no need to come back for the swing high, or if there's no more liquidity up here because we're here to block all the orders from going back above it, that means we're going to go for the opposing liquidity, which would be the nearest swing low or internal low, which is exactly what happens here. We create an order block, multiple propulsion blocks, and then we speed up to the downside. Okay, now let's go over another example of a propulsion block because this is kind of a bad example. It's at like Asia session. All right, so remember how I said a propulsion block is simply an OB off of another OB. It has to touch the OB, either some form of the OB. So for example, like I said, you want to enter off the body. Okay. However, you can still have a GAN box over your OB. Something like this, right? Because you can either enter on the body of the OB, which is the open. That should be the strongest point. But sometimes when price is a little bit sloppier, we tend to come down to what's called mean threshold of the OB, which is simply the middle. And I'm sure you guys have seen me take trades like that sometimes where we enter off mean threshold of an OB. And you can see here, we swept out a low. We get that swing point. Once again, putting in line chart before I go over this, you can see we have that little swing. We dip down a little bit. We don't exactly tap the open of this candle. However, it's still touching the wick, which means it's still technically tapping into the OB itself, which means it's touching. And then we are trying to get another engulfing candle above this bearish one or above both of these candles. Don't worry, we're going to talk about when you're supposed to group them together and all that. Okay, and then what do we get? We get a close above these two bearish candles, giving us a propulsion block, PB for short. Once again, why is this my favorite? It's because you don't even have to worry about this OB being the real one, because you can see here, this OB looked like it was real. We kind of swept the low again. This OB looked like it was real. We really swept the low. The propulsion block saves you from trusting unnecessary OBs or getting stopped out for no reason. That's why you see me using them all the time. That's why I always say it's my bread and butter, because it's simply a reaction-based play. If you wait for the OB to form, wait for us to tap into the OB and get a new one off of it, that's a propulsion block. Not only does a propulsion block give you a signal that your OB down here may be real, but it also gives you speed. Propulsion blocks give you speed. It's in the name. Remember, don't overthink it. Prop block, propulsion block, it's propelling price to the upside. Once again, targeting opposing liquidity. Okay, so we get the swing low down here. We pop up. Where are we going? Opposing liquidity. That's why we talked about liquidity first. Going to that high. Okay, let's see what happens when we hit the high. Do we get another OB? No. Now, let's talk about when an OB forms. Okay, a little bit better. Just a little bit better. Your real OBs, what you're looking for, once again, think back to this. Okay, a tweezer. This is basically the cheat code to OBs right here, what I'm about to explain. Even if you aren't sure what, like if this is a real OB, you want it to be having the two wicks right here or the two wicks at the bottom. Okay, down here we have a wick here, but it's a devil's mark there, but we still get a pretty strong engulfing candle. The key to knowing if you're seeing an OB or not is, of course, to look for the tweezer top and bottom, but also you want it to be a liquidity sweep. Okay, Your best OBs or your real OBs will come from us sweeping liquidity or delivering out of an FVG. I'm going to say that again. Your real OBs are going to come from us sweeping liquidity or delivering out of an FVG. So if we have this as a liquidity sweep, we get that swing point, then we get our prop block, we're moving up, we sweep out liquidity here. Maybe you'd be thinking, well, man, we might turn around. Do we actually get a bearish OB here? No, because we would have had to close back beneath this bullish candle to make a bearish OB. Another thing, OBs confirm turtle soups. This is the 30-second. We swept out the low and we're moving up. This is a turtle soup. We swept out the low, soup the low, and move in the opposite direction. On the 1 minute or the 2 minute, actually, this will look like just one wick. You see how that's just a wick? It's a turtle soup. On the 2 minute, it's just a simple wick, and then we fly. But on the 30-second, it's an actual OB. Okay, we'll explain why that's extremely useful in a second. Now we're going to move on to rejection blocks. So we kind of already talked about order blocks here. We're going to talk about rejection blocks now, okay? What is a rejection block? A rejection block is simply when we have a candle that looks like an OB, but it's simply a doji. Okay, what does that mean? Okay, this is, of course, a cherry-picked example, but you'll get the idea of what I'm trying to say. So what do we have here? We swept out a low. We get a bearish candle that gets engulfed by this bullish candle here. What is that? This is an OB. Once again, if you can't see it, the line chart is your cheat code. We get that swing. Okay, we don't always come back to the OBs on the entries, or once again, the open of the candle is your entry. We don't always do it. More recently, price just kind of takes off. Remember what I was saying though, an OB or prop block is simply an OB that's connected to another OB. Well, what do we have here? We tap into an FVG and then we engulf this bearish candle. What does that make it? It makes it a new OB. If this is our OB and we tap into it right here on this bearish candle and then we engulf that bearish candle, what does that make it? It makes it a prop block. Okay, so if this is another OB and then this candle taps into that OB, we engulf this bearish candle right here, that makes this a prop block. Okay, yes, it is a prop block, but what it also is, technically speaking, is this right here is a rejection block. Okay, now I'm not here to confuse anybody, but it can sometimes be both. Sometimes your best rejection blocks will form at the absolute lows. Let me go to a higher time frame, because I really want you guys to see like how they form like on a regular basis. For example, like this. So a rejection block, once again, is simply what you're looking for is a doji candle, but the characteristic of an OB. What does that mean? It means you'll have a bullish candle. This, once again, will take a second to draw, but you'll see exactly what I mean in a second. We're looking for a rejection block. Once again, this is actually the strongest version of an OB. A rejection block is the strongest version of an OB. If we have a candle like this, that's a doji, but it still gets engulfed, right? That's still technically an OB. However, when the wicks are bigger than the body itself and it's an engulfing candle, we call that a rejection block. Why is that? It's because price hates wicks. Whenever you have an engulfing candle, yes, this is an OB, but the type of OB it is a rejection block. Okay, it's when you have an engulfing candle, but the candle that's supposed to be your OB, the bearish one, where the wicks are bigger than the body itself. So what does that mean? It means if we simply measured the wicks here, the wicks are like 70 points each. The body is probably like 20 points or so, right? Which means the wicks are bigger than the body. This is a rejection block. Where do you enter on a rejection block? Think back to an OB. On an OB, a regular OB, you'd enter off the open of this bearish candle to try to get an entry, you know, as price kind of comes back down here, you tap it, and then we go up. For rejection block, you want to enter on the close of the candle. Why is that? It's for some reason, price loves to tap the rejection block close and just fly. It's a strong, strong reaction. It's in the name. Remember, I said don't overthink it. It's in the name, rejection block. If price is going to reject, that's a, you know, it's going to just fly in the opposite direction. Okay, similar to a propulsion block where we have that speed, a rejection block is the extremity of the range, the absolute lowest it can possibly go to reject from rejection block. Okay, now let's find a good example of one. Once again, we're on the 5 minute here. This right here, we have a tap into an FVG, or really like equal lows kind of a thing, right? If I'm on the 5 minute, these are really equal lows. We'll just call this a tap into the FVG. We tap the FVG on this candle, we engulf it, and we leave an OB, yes, but what type of OB is it? It's a rejection block. Why? because the wick is 28 points. The body of this candle is 16 points. What does that mean? It means that this right here is a rejection block, and price should be very, very sensitive to the close of the candle, not the open. Okay, I want you to understand that. You can see here that we did react to the open of the candle first and then go up a little bit, but we come back down to this rejection block, and then we pop all the way back up. Let me explain what a rejection block's job is to do. When we have a rejection block and we haven't reached the real liquidity, right? Say the actual target is, you can see if I zoom out here, you can see the real swing high in this case is up here. If I go back in replay mode, back here, we still haven't hit that high. If you can say that price is extremely bullish to try to get to this high, you know, to complete like a buy model here, that's what it looks like. Price and it doesn't tap the rejection block, you best believe we're going to get a stop run into the rejection block. Okay, what does that also mean? It means that a rejection block stops a stop run. Rejection block, it's a different type of order block. Remember, order block, all of these are supposed to block the orders from going through. However, a rejection block is the strongest. Now remember, the rejection block, the close of the candle is supposed to be the strongest point. It's supposed to be, but more recently, sometimes we dip down to like 50 of the wick of a rejection block sometimes, and sometimes we even sweep out the low, but still hold this close of the body. That's what the market has been doing recently. It's not supposed to be like that. It's supposed to be like a quick little tap of the rejection block, and then we go. But you can see here we kind of close beneath it. This close beneath used to mean that we're going to hit the low. Nowadays, we'll close beneath it slightly and still hold it, and then go, right? You can see we kind of swept the high first. But look what happens here. We sweep the high. We get what could be a bearish OB. We're supposed to hit this low, but the rejection block holds price. Let's actually zoom in here so we can see it better. We sweep out the high. Remember, if we sweep out a high, you can expect an OB to form because that's liquidity being swept. We have what? A swing, that little hump. We have the tweezer thing, right? If I go back to that picture, we have that little tweezer thing at the top, right? The tweezer top, these two little wicks. And then followed by an engulfing candle. It's not exactly engulfing because we kind of just barely close beneath it, but it's supposed to send us to where? Opposing liquidity. That's actually what we did here. And the line chart is the cheat code, once again. However, in the candlestick form, these are equal lows. A lot of people are trying to get to these equal lows. This is a stop run to the equal lows. However, what stops us from getting to the equal lows? The rejection block. And you can see exactly what happens. Not only do we hit the high, but we hit the main swing. Once again, what is a rejection block? Really quick, just to recap. The characteristic of an OB, which is what? An engulfing candle after liquidity being swept or after us tapping an FEG. Right? All we did was get an engulfing candle on this after this bearish one. However, the wick is bigger than the body itself. That's a rejection block. Whenever you see the wick being bigger than the body, that's a rejection block. You're supposed to enter on the close of the candle for a rejection block. And yes, it's worked on every single time frame. Now, one last thing I want to say. Rejection blocks are only bearish candles. Okay? That's a common misconception. People will see something on maybe the 5-minute where we have a wick at the bottom. For example, we're not just looking at the lowest candle here. This right here, this bullish candle, even though it's the lowest candle here, this is not a rejection block. No, this is not a rejection block. This one is. Now, once again, there is no such thing as a bearish rejection block. I want you to understand that. There is no such thing as a bearish rejection block. This right here at the top is not a rejection block. Even if it was a bullish doji, that's not a rejection block. Like this right here, this is not a rejection block. I want to be very clear. A rejection block can only be from a bearish candle. This right here is not a rejection block. Why is that? Why am I saying that? It's because when you're trying this as a rejection block, you'd enter off the close, expecting to hold. We're not going to hold this. We're going to take liquidity. That's why you don't want to just take this as a short. We're going to take liquidity. The market is made to only go up. If you try this, you're going to get burnt more times than not. It's too low probability for you to even trust it, so it doesn't exist. Wait, so why isn't the bearish candle, 2 candles before that, not a rejection block? Oh, this one right here, it is. Absolutely it is. But you see what happens here. This one is too. So really, this one right here is a rejection block. Technically speaking, it's a prop block. Why is it a prop block? Because this is the real rejection block. That's actually what started this entire thing. You can see what happened. We have an OB down here, right? The OB that started it. And then we tap into the OB here. We also tap into this CISD here. We're going to get that in a second as well. We're going to wrap it up with that. But this is our OB. This is our CISD. We'll talk about it in a second as to why, but just focus on the rejection block for now. This right here is technically a rejection block in the form of a prop block. Okay, don't overthink it. Just call it a rejection block. But that's what this is. An OB off another OB, that's a prop block. However, the type of prop block this is a rejection block. If it's a rejection block, if we get a stop run back into it, it's supposed to hold. You may be wondering, well, Playa, what about this one? This one kind of failed. It did. But it's still your sign that we're going to go lower. If a rejection block fails, we're going to go lower. Simple as that. And if you watch my first order block video, you'll know that all real OBs are connected. That's also what you see here. Now, let's talk about the CISD thing. We'll wrap it up with that. This is probably the most important thing to remember. Every single order block that you see is a stop run. I'm going to write this part out. Okay. Every real OB is a stop run. If you can't see the stop run on the time frame that you're on, then it's on the lower time frame. Okay. You have to think about this. This is why it's called an advanced OB class, because every single OB is a fractal. Okay. This swing that we make right here is just a wick on the higher time frame. Remember, I showed that example of the 30-second to 2-minute. Right? On the 30-second, there's an OB down here, but on the 2-minute, it was just a wick. It's because every OB is a stop run. If we have a stop run, now you can see how it all ties hand in hand. When you have a stop run, we're going to buy back the stop run very quickly. It becomes a wick. That wick being made, that's the reason why we don't want to come back down here, because there's no more orders to fill. There's no more liquidity down here. It's just a wick on the higher time frame. If it's just a wick, no one needs to be stopped out because the wick's not even real. We'll talk about that in a later video, but the wicks aren't real. Let's visualize what this looks like. This up here, if there's a wick here, that means, once again, I'm on the 5-minute. This is a 5-minute FEG. If there's a wick right here on the 5-minute, there should be a lower time frame 1-minute OB somewhere, or 30-second somewhere, because every single OB is a stop run. If we have an OB here on the 1-minute, once again, the engulfing candle, once again, think back to the picture. I cannot stress it enough. It's the literal cheat code. If this is a tweezer top, we have the two little wicks right here, and we get that engulfing candle. Guess what? That's going to be an OB. Engulfing candle becomes an OB. Okay, cool. What this looks like is a wick on the 5-minute. It's just a wick, which could turn into an OB on the 5-minute. What happens when this turns into an OB on the 5-minute? What does that look like on the 1-minute? That's where you get your real CISD. Okay, this right here, this CISD would become the 5-minute OB. You can see how it's just that one singular bearish engulfing candle. If we get it, that's a CISD on the 1-minute. That's where you get your manipulation legs. That's where you get your standard deviations from. It all goes hand in hand. This is what I'm saying. When you think about OBs, this is more advanced side of things, it's all just a fractal. All of it is just a fractal. Every real OB is a stop run. If you can't see the stop run on the time frame you're on, go to a lower time frame. These wicks up here, guess what this is? Remember, we're on the 1-minute here. These wicks right here, this is a 15-second OB at the very top. Look at that. Engulfing candle back down. This is a 15-second OB. Followed by what? These set of bullish candles being engulfed. That's just the CISD on the 15-second. But what is it on the 1-minute? It's that one singular candle being closed beneath to get the OB. Once again, this is extremely advanced. I don't expect you guys to understand it right away. But when you look deeper and deeper and deeper at this, that's what you're seeing. Why is this useful, you may be wondering? Well, if you go on something like just a normal median time frame, something like the 5-minute, where it's not too big of a time frame, it's not too little of a time frame, you simply look for a tab into an FEG, sweeping liquidity as well. You can take a 1-minute OB to the downside to target a 5-minute liquidity pool. So say this 5-minute ITL, for example, say we want to get down to this 5-minute ITL. This is also tying into how you enter as well. Say we want to get to that 5-minute ITL, we have a 1-minute OB, we have the 1-minute CISD here, confirmed by the close beneath. Once again, the collection of candles is your CISD. An OB is one singular candle. Okay, let me explain that as well. One singular candle, that's your OB. Being engulfed, that's the OB. The collection of candles is a CISD. Why is it a CISD? Because it's a higher time frame OB. So to simplify that even more, a CISD can be defined by a higher time frame OB. So I'm going to say that again, but slower. A CISD can be defined by a higher time frame OB being made. What does that higher time frame OB look like on the lower time frame that you're looking at? It's going to be a collection of candles. This collection of candles being closed through is a CISD. That's the first sign of the 5-minute wanting to get lower. If we get a 5-minute OB here, we almost guaranteed to hit this because it's the internal low, or at least one of these two. Okay, let's see if that happens here. So if you have a 1-minute CISD and an OB, looks like we're coming back a little bit. We're coming back into the OB. We came all the way back to the top, okay, back into this 5-minute FEG. We didn't sweep the high. What this really is us stopping at 50 this wick. Why is that important, you may ask? Because once again, going back to the 15-second, I know some people don't trade it, but all we did was tap back into this last OB on the 15-second. That's what that is. Every single time you hear somebody talk about 50 of a wick, it's just simply a lower time frame OB, somewhere way down there. Now, remember what I said, this is not a rejection block, by the way. We just end up holding the last OB. That's what this is. But anyways, going back to the 1-minute, okay, we get maybe a double sweep on this FEG, not exactly a sweep on the high. You can still be in this play. If you're taking this OB as a short, you would have your stop on the high. That's a big stop, actually. I didn't realize it was like 50 points or so. But say we waited for a prop block, right? An OB off of another OB. That's what this is. We tap back into this OB. We're simply looking for an engulfing candle right back beneath it at any point. We finally get that here. This is our prop block. Or maybe you classify this as a new OB because we kind of did go up a little bit. You would say maybe, okay, this is our OB. I'm going to look for another OB off of it. That would be the prop block. Let's see if we get that. All we're looking for is an engulfing candle beneath this one. So far, we kind of did get it here. So you really could enter right here. Okay. Now, this is not the greatest close in the world. Me personally, I'd probably be waiting. Once again, that's kind of an experience thing. Let's see if we get it. Okay, right there. Absolutely. I would trust it then. But you can see how we still have the OB. This technically is the real prop block. This one also is one. What does a prop block do? It gives us speed. That's exactly what we just got here. Okay. Then we fall back beneath the CISD. What does that do? On the 5-minute, that's giving us the real OB now. You see how we finally engulf this candle? And now we have the OB. Now what? We're trying to still target that ITO. Because we have the 5-minute and the 1-minute bearish OBs, what can we say now? We can trust bearish PD arrays. We can trust a short back from OTE if we come back. We can trust a short in premium if we come back. That's how you get your big plays. That's how you get strong confidence in your plays. It looks like we don't come back, but you can see what happens here. It all starts from the sweep, the OB, the CISD, and all that being working hand in hand. This is just one example. It gets even better if you combine standard deviations with this. Just remember, guys, an OB, I'm going to write this part out as well. So an OB is a singular candle. That's the time frame you're looking at. You're looking for that engulfing candle, that tweezer top as well to get it even easier. Then you're looking for your higher time frame OB because you really want maybe a bigger play. So you take this bearish OB just to get to this internal low. Maybe that's not enough for you. Maybe you want more points. Well, you're looking for a CISD then. Your CISD is simply your higher time frame OB. It's simply when the 5-minute is ready to get that engulfing candle. I'm just going to do this so make it easier to see. This now is the 5-minute chart. You were simply looking for one singular OB here, or basically right here, because this is where we swept the high originally. You're looking for that OB on the 5-minute. That's going to become your 1-minute closing beneath the collection of candles. Once you get that close to the collection of candles, you can expect a pretty big move, or at least a decent move for the 5-minute to get to its internal liquidity. And then sometimes you get something like this where we have a full-on market maker sell model. But I thank you all for stopping by. Hopefully learned a thing or two about OBs and how to use them. And yeah, we'll see you next time. Peace.